Nvidia reported quarterly financial results after the stock markets closed today, Wednesday, May 28th, 2025, that were better than what I was expecting. It was better than what management was forecasting, and I'm happy to see that, of course, because I've had Nvidia stock rated as one of the best 9 stocks to buy in 2025, and I own Nvidia shares myself, so I'm happy to see the stock price rising over 5% in the aftermarket hours following the company's financial release. I'm going to review those figures here in this video, share with you the big picture items from here, the takeaways, and I'll update my recommendation, let you know if I still think the stock is one of the best stocks to buy right now, or if there's anything in these earnings results that has me concerned and suggest a reason to sell. I'll let you know all of that in this relatively short video. So let's get into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Nvidia first quarter fiscal year 2026 financial results. I'm looking at the CFO commentary here, and you can get this from Nvidia's investor relations website and follow along if you wish to do so. Revenue came in at $44 billion, and that was up 69% from the same quarter last year. This was better than what management was forecasting and better than what stock market participants were expecting from Nvidia. One thing that I got surprised at initially was when I saw the gross profit margin at just 60%. That's a 17.9% decline year over year, and it was much lower than what management was forecasting, above 70%. And I was a little bit taken aback when I saw that, and I was like, oh my goodness, the stock price is going to beat down big time if the company reported gross margins in 60%. But then I forgot that they were going to include the impacts of the one-time negative consequences of the ban on its H20 technology to China, and that charge that it took in the quarter because of that created a decline in its margin. I'll talk a little more about that in a moment. The operating income jumped to over 21.6 billion. That was up from 16.9 billion, or a 28% increase in operating income. That was partly due to that one-time charge, and I expect the operating income to be growing much faster in the upcoming quarter. So here, Nvidia reported non-GAAP results, which adjusts for that impact of the H20 charge, and the gross profit margin would have been 71.3%, excluding that impact, which would be in line with what management was forecasting, a little bit better than what management was forecasting on this important metric. So they said that as a result of these new restrictions on sales to China, as a result of those new requirements, they incurred a $4.5 billion charge in the first quarter of fiscal year 2026. Remember, I did a video about this announcement a couple of weeks ago, and the initial expectation was that it was going to cost the company $5 billion, but it only ended up costing them $4.5 billion. So 10% less, or $500 million less than was expected. The $4.5 billion charge was less than what we initially anticipated and announced, and I did a video about that, as they were able to reuse certain materials, and so they didn't experience as big of a loss as they were expecting. So they saw their Blackwell architecture ramp expand to all customer categories, while large cloud service providers remained their largest at just under 50% of data center revenue. And it's been holding relatively constant at around 50% of data center revenue going to the large cloud providers. These are Amazon, Microsoft, Alphabet, etc. And it's good to see the company saying it's expanding to all customer categories. So demand for this architecture is going beyond just the large hyperscalers, and revenue growth in the data center increased 73% year over year, despite it already reaching such large scale, and despite this being now several quarters in a row where revenue has grown above 70%. There was even quarters where revenue increased by over 100%. So the company's demand for its products are strong. In fact, the CEO said that demand remains incredibly strong, right? Those adjectives have been remarkable coming out of Nvidia's CEO. It's not just that revenue is strong, but it's incredibly strong. He's used words like insane before to describe demand for its products. And for a customer that wants to get their hands on their technology, it's probably sold out and they have to wait to get this technology. Now, they are ramping up this new category. Well, I shouldn't say new, but a category that's growing quickly alongside its Blackwell architecture is the networking revenue. Came in at $5 billion, and that was up 56% from a year ago. This is driven by the growth of the NVLink compute fabric in their GB200 systems and continued adoption of the Ethernet for AI solutions at cloud service providers and consumer internet companies. So along with the Grace Blackwell technology, it's generating revenue in the networking segment, and that's good news for Nvidia stock investors, to be sure. This is a category I've been watching as a potential catalyst a couple of years down the road is the automotive revenue. For the first quarter was up 72%, so we're already seeing strong demand here as a result of sales of self-driving platforms. So if you're bullish on self-driving technology and you want to benefit from the growth of that business, Nvidia could be a better choice. Some investors are going with Tesla because of their belief in driverless car technology. But Tesla stock is trading at a forward price to earnings of around 200 or 170 to be more precise, while Nvidia stock is trading at a forward price to earnings of 30. So you can get Nvidia stock at roughly 1/5 the valuation you can get Tesla stock, and Nvidia stock will arguably benefit as a result of self-driving technology. Maybe not as much as Tesla if it actually develops the self-driving technology, but it'll benefit as a result, and you can get Nvidia stock at a fraction of the valuation, and you get a more diversified business that's a lot more lucrative, a lot more profitable at a lot better valuation. Nvidia said that cash flow from operations came in at $27.4 billion. That's up from $15.3 billion a year ago. So its cash flow from operations increased by over 50% to $27.4 billion. They used a lot of that cash to buy back shares. In fact, they bought back $14.3 billion worth of their own stock. They utilized $14.3 billion. They bought back $14.1 billion, and they paid $244 million in dividends. So this is a management team that believes its shares are undervalued, and they spent $14 billion buying back Nvidia stock. That's how much they feel their shares are undervalued. They actually went out and purchased $14 billion of shares. I caution all stock market investors to do not believe management teams that hype up their shares, that hype up their stock, that are also not going out and buying up their stock. Okay? There's a lot of management teams that go around talking about how they feel their shares are undervalued, but they're not spending a penny buying back their shares. And then you have management teams like Nvidia that just went out and spent $14 billion buying back their stock. Every CEO wants the share price of their company to be higher because CEO compensation is usually connected to a higher share price. So they will go around hyping up their company regardless of how they actually feel about their company's prospects. The one way you can really tell if a company's management team believes that their shares are undervalued is if they're spending money buying back shares. Nvidia spent $14 billion buying back shares. Other companies, meanwhile, have, on the one hand, talked about how they believe their shares are undervalued, and on the other hand, have sold off as much stock as they can possibly sell. So I caution you to pay attention to this when you're listening to CEOs talk, because they will all be boastful about their company. It's in their nature because they're incentivized to do so. So looking ahead, the company is forecasting revenue of $45 billion, and the outlook reflects a loss in H20 revenue of approximately $8 billion. Wow. So imagine if they didn't have that restriction, revenue forecast would have been 53 billion for Nvidia in the upcoming quarter. Still, a revenue of 45 billion is excellent in the quarter ahead, and the company a little bit less than what the market was expecting. The market was expecting Nvidia to forecast revenue of about 46 billion. They're forecasting 45 billion. But Nvidia has very oftentimes beat expectations on what they have guided, including this quarter. So this is a solid guide. And then they're forecasting gross profit margins of about 72%, which is in line with what I was expecting. And this is what I wanted to see. The company had been talking about getting their gross margins in the mid 70% range. And I wanted to see them reiterate that guidance given these headwinds, right? Given the headwinds of the restriction to China sales, and then given the macroeconomic headwinds with the increasing tariffs on and off again tariffs. I wanted to see if the company can still deliver gross margins in the mid 70 range next year. And they are saying they still believe they can do that, which is really good news. I was not expecting them to remain confident in achieving this mid 70% margin given these big headwinds. So all in all, a really good quarter from Nvidia, better than what I was expecting. And so to update my recommendation, do I still think Nvidia is one of the top 9 stocks to buy right now? Absolutely. I am even more confident, more bullish on Nvidia stock following the earnings release and the 5% more expensive valuation than I was earlier this morning before the earnings came out.
Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.